In a major step forward for crypto asset accessibility, Volatility Shares has officially launched the first-ever U.S.-listed XRP Futures ETF, giving investors new exposure to the world's fifth-largest cryptocurrency without having to directly own the token itself. The fund, trading under the ticker symbol XRPF, went live this week and marks a significant development not just for XRP holders, but for the broader crypto market. It is the latest in a growing trend of financial products designed to bridge traditional markets and the digital asset world. This move comes at a time when XRP has seen a resurgence in investor interest, thanks in part to Ripple's ongoing legal battles with the U.S. Securities and Exchange Commission, which appear to be winding down. While the regulatory status of XRP remains a topic of debate, this ETF provides a new way for traders and institutions to gain exposure, all while sidestepping the direct custody risks of holding crypto. So what exactly does an XRP Futures ETF mean for the market? Unlike spot ETFs, which directly hold the underlying asset, a futures ETF tracks the price of XRP through standardized futures contracts traded on the Chicago Mercantile Exchange. This allows the fund to mimic the asset's price movements, giving investors a taste of XRP's market action without the regulatory hurdles involved in spot custody. Volatility Shares, the firm behind the product, is no stranger to pushing boundaries. They previously launched the first leveraged Bitcoin futures ETF in the US, and now they're expanding that model to altcoins, starting with XRP. According to the company, demand for diversified crypto exposure is growing fast, and XRP's high liquidity and consistent trading volume made it an ideal candidate for this type of fund. For investors, XRPF opens the door to XRP participation through traditional brokerage accounts and retirement portfolios, something that could be particularly appealing to those wary of crypto exchanges or security risks. It also signals that Wall Street's appetite for digital assets is not limited to just Bitcoin and Ethereum. That said, futures-based ETFs do carry certain complexities. They are subject to roll costs, contract expiration issues, and may not always track the spot price perfectly. Experts recommend that retail investors fully understand how these products work before diving in. Still, the bigger takeaway is clear. XRP is entering a new phase of institutional accessibility. As regulatory clarity improves and financial innovation continues, we may see a wave of similar products tied to other major altcoins in the near future. The XRPF launch comes at a time when crypto markets are showing renewed strength, and it could very well pave the way for expanded interest in XRP during this next phase of digital asset adoption. We'll be watching how the fund performs and how investors respond as this new chapter in crypto investment unfolds.